Hi everyone, so welcome to Investing for Values. So today I have another stock on demand. This is Shopify. Share price currently $531. So like 12 months ago, this share price was $178. So it's kind of risen by almost 3 times since that time. So what's special about this company? This country has market, it kind of facilitates a platform for other people to sell their products. A bit like Amazon in the scheme of things. Though instead of $1 trillion that Amazon's selling for, this one's at $61 billion. So we're going to break down the figures and then see how things match up. So like in terms of where this company's at, it's got 1 million merchants worldwide. 52% of them are in the US, and then they've got some in the UK, Canada, Australia, and some smaller markets around the world. So this company does have a lot of room to grow, though I kind of question the valuation in light of the revenues. So if we look at the revenues, recently it just reported it's got about close to 1.6 billion in revenue, 40% up from the prior year when it was just passing that $1 billion mark. And 2 years ago it was at $673 million, which it had represented a 60% growth. So if we look at things how they're projecting, right, it's gone from 60% to 46%, and then now they've given a guidance for this year, and they expect somewhere between 35 to 36% growing over the $2 billion mark, which is quite impressive growth. Like, if we just look at the company and the business, the growth is great, but it is slowing down really quickly because it's gone from like 60% to 46%, and then that's dropped at another 10%, and then what if like the year after that it drops like 25%, or like at least it's going to go down to at least 30%, if not below that. I think probably closer to that 25%, given their large numbers. Though how large are the numbers? Because like at the end of the day, like if we even price in this year's revenue and say $2 billion, this company at the end of the day is still making losses. Like last year it still lost $124 million, $0.8 million, and that's double on the $64.5 million it lost before that, and before that it was $40 million. So the losses are actually really stacking up. So what gives? Like, how is this company selling at 61 billion when revenues are just at most 2 billion this year, and their losses, they could be even higher because this company is chasing growth. So I think a lot of investors like it because they understand that it's shopping, just like the other companies that do retail. Investors quite like that kind of industry because it's very easy to understand. You kind of see where this company is growing. It's building a really nice platform for like users to kind of go onto and sell products and shop. So this is kind of like Amazon, in the making again. Though like I don't know how the revenues stack up though, like compared to, like, if you're selling at 61 billion in market value, though Amazon kind of had this problem too. Like the revenues would be quite, they'll be growing quick, but in the scheme of things, the market value was quite high for Amazon, though it eventually justified its market value. The question is, does Shopify ever justify its market value? And like currently I don't really see it that way. Like, it's very hard to justify a company with 2 billion in revenues, no profits at all, losing potentially at least $125 million, though they have 650 million in the bank, which they raised last year in the third quarter, and that's probably going to keep them running for a good couple of years. why they chase growth, because at 61 billion, you know, you might as well chase growth. If you're not chasing growth, things aren't, you know, looking great in the scheme of things. So like even Amazon grow at like 40% for quite a number of years. What's worrying about Shopify is it's forecasting below the 40%. Amazon was amazing when it was able to grow at 40% really consistently over like several years. Though it has slowed down recently to about just above the 20% mark. Though, you know, those are large revenues, whereas these revenues aren't actually that large. And most of the merchants pay less than $50. So that's kind of a very difficult situation. Like, how does this company make a lot of profits in the future? This is a situation of like, are we buying the platform in the future when it becomes immensely popular? Because this could be a market share play where they're aiming for market share rather than trying to get revenues, right? If you get market share, that itself is value. So in the scheme of things, how do we value such a company? Well, we'd look at the moat of the moats, right? At the current situation, you want to build the platform. So you want to build the platform, attract everyone onto your platform, and then you can just start charging the real dollars, right? You're kind of like doing an Uber here. You know, you're building out market share, but you don't mind losing money. But the minute you get your market share, the minute things consolidate, that's when you can just start reeling it in and making the money. Like Uber hasn't made money yet, but it will soon. And Shopify, like one day it will make money. Can you justify $61 billion price tag? It's quite high. Like that price tag is too high for me to recommend it. Like if we have a market crash, where are people going to take the money? They're probably going to take it here. Considering you're on like a good 200% in profit if you're still holding from the 178, or even higher if you were holding before that. So like a lot of people are looking at this being a platform that's going to be here for a long time, and it's going to have a very strong competitive advantage. But you know, I would say like there's better companies you can buy in terms of value compared to Shopify. Though you could be watching it and going, the share price isn't going to get cheaper. It's like Amazon, things don't get cheaper. So the only best play I can recommend, if you really must get in, like for me, it wouldn't be a share price that I'm rushing to get in. Though you could be, you know, like this is a quite a speculative play, because this kind of share price is valuing a lot of growth, a lot of competitive advantages in the future, and I just don't know if I can see it that far forward. So in terms of like, if you really wanted to buy into this company, like you can buy a little bit, like you can buy 10% or something of what you really wanted to buy in terms of a full investment. And if the price ever comes lower, then you can buy a bit more. And as it comes lower, just buy a bit more. So, and if it ever goes too high, I mean, just get rid of that position, because things, you know, I don't see the justification of this price tag, at least not yet. Like, I think this price tag kind of values it on a premium based on like how strong the product is. Though if you really want to buy something with a competitive advantage, why don't you just buy something like Tesla? Like at least Tesla's gonna make profit. Or even you can just, you know, consider Amazon. Though Amazon might not be growing as quick now, though they're a profitable company. So in terms of that, like, can I see these guys going higher in the future? Like, it's very likely they could, you know. based on how things are going. But currently the price tag is very hard to justify, though a market's showing that they can see something in its potential. So, like if you pay this much for potential and it doesn't deliver, the fall from grace is huge. So that's kind of my view of Shopify. Like, it's not. This one's definitely not an easy one to like get your mind around in terms of its valuation. Um, like, from my point of view, it's definitely worth more than 30 billion. Um, but I don't think it's worth 60 billion. So like, I think you can possibly pay 40, which would be going. It really has to come down quite a bit to get to that mark. I'd say, yeah, maybe it's worth buying in the $300 to $400 mark. Though I can't justify a $531 mark. It's really high. Like, it's really, really, really high. Like, I cannot justify like even paying this much for a stock. Like, if I saw the stock, and like at the end of the day, like the only competitive advantage is the technology it's building on its platform. Apart from that, if Amazon decided that it wanted to compete, would it hold? Would it hold? And the thing is, how much cash can they burn before they need to make profit? Because you're on 2 billion right now, and 2 billion, and you're losing money. So that's the thing. How much profit can you really make on 2 billion? Probably not a lot. So you're looking at this company and you're really hoping this becomes like a $10 billion revenue company, like in the next 10 years or something. Then it might start to justify the price tag. Like if like margin, if they can make a billion out of 10 billion, then maybe they're worth 100 billion in 10 years. Though like at this rate, can they do it? It's a very difficult question of regarding if they can hit 10 billion. So it's, for me, I don't think it's a buy right now. I'd say like if you really want to get in, like you can buy a little bit, but if you're willing to wait, then I'd say wait between like probably around that $400 mark or less. And then that kind of justifies a bit of like fair value. Like currently it's a premium. 400 would be a fair value. 300 would be like a bit of margin of safety. But yeah, like it's very hard to justify this stock. Like I'm trying to rationalize this, and seeing why the market's paying this much for this stock, and it's quite a difficult one. So that's kind of just my opinion. Let me know what your opinion is, or if you have any other stocks you want to look at. There's definitely other stocks with a bit more value in terms of you can look at. You don't have to get into Shopify. Like if you compare the metrics, it's quite high in all regards. I think that's all I really want to say. Like, it's just a very highly valued company, with potentially a really strong platform. But the thing is, why would you want to overpay for a price like a share? So that's the thing. Like, it might hit higher. Though if things were to fall, it has a lot of room to fall in terms of risk to reward ratio. I can't see it matching up here, so I'm not going to recommend buying it yet. I would say like if you really want to get into this, like maybe at a lower price tag, and then just see how you go. And yeah, I think they've already given you the projections for this year, and that's 12 months in advance. So it's a big question of can they deliver on that, and can they maintain at least 30%? Because if they don't, the minute something growth slows on this platform, the stock drops. because it's not going to be able to justify the price tag as it goes. But until then, well, good luck investing, everyone.